Hello guys, welcome back to my channel. Don't forget to like, share, comment, and subscribe. Crude price jumped some 4% Monday as buyers flowed into a market where expectations were going by the day for production cuts by the enlarged OPEC plus cartel. The 13-member Saudi-led organization of the petroleum exporting countries and Eastern oil producing allies steered by Russia will meet on September 5th. Almost every country in the 23-strong alliance, except for Saudi Arabia and the United Arab Emirates, are producing below quota now. Yet, a variety seems to be growing within the cartel that oil price should recapture the hike from earlier this year, when global crude benchmark Brent was trading as high as 140 a barrel in the aftermath of the Ukraine invasion, and US crude stood at almost $130. Brent is almost $40 below those peaks, and US crude more than $30 lower. The grand plan among OPEC plus less significant members is that cuts be announced at next week meeting and that the Saudis and Emirates carry those reductions as has been the norm in the alliance for most of the past 2 years. It's the same story each time, said John Kilduff, partner at New York energy hedge fund Again Capital. Crude price dropped $20 or more a barrel, and these OPEC plus guys will be yelling cut when they producing will below quota. They'll make whatever noise they can between now and the next week to try and get the market up as much as possible. My reckoning is by the following week, the price will tumble again unless the Saudis and the UAE are willing to cut substantially of what they are producing, said Kilduff. I'm not sure how much of their market share the Saudis and the UAE will want to risk with deep cuts. Unless they do such cuts, market sentiment will probably weaken again as we're entering the seasonally lower demand period for oil. That's when sell on the facts will come. Ed Moya, analyst at online trading platform OANDA, concurred that OPIC Plus will try pushing its like as much as possible for higher price. The supply side risks are too great and price need to find a home above the 100 a barrel level for producer to get less noisy on price, said Moya. At Monday's settlement, New York traded with Texas Intermediate crude. The benchmark for U.S. crude closed up $3.95 or 4.2% at 97.01 per barrel. WTI rose 2.5% for all of last week after the previous week's decline of 1.4%. Brent crude, the London traded global benchmark for oil, finished the session up $4.10 or 4.1% last week. Brent jumped 4.4% versus the previous week's slide of 1.5%. OPIC plus production cuts aside, oil sentiment in oil was also boosted by renewed conflict in Libya and rising demand amid soaring natural gas prices in Europe that helped offset of a dire outlook for growth in the United States. Heavy clashes in Libya's capital, which killed 32 people on the weekend, sparked concern that the country would slide into a full-blown conflict, which could again disrupt crude supply from one of OPEC's larger producer. In Europe, higher natural gas prices in Europe were spurring power generators and industrial users to switch to diesel and fuel oil, further supporting crude price. Oil prices have been on an upward trajectory of late. A flurry of support was expressed on Friday by OPEC plus member states, including Iraq, Venezuela, and Kazakhstan, about readiness within the 23 strong oil producing alliance to intervene and restore balance in the oil market. Okay, that's all from me. Thank you for watching. Don't forget to like, share, comment, and subscribe. Thank you.